And welcome everyone to SEG's panel discussion, We Survived the Global Financial Crisis, You Can Survive the COVID-19 Downturn. I'm Chris Feeble and will be your host today. I run SEG's business development and research efforts, and we're super excited to bring together a wonderful group of individuals to share their insights during this challenging period. As many of you know, SEG is constantly striving to deliver relevant content and research to those focused on the B2B software and SaaS segments. So please feel free to visit our website for a plethora of additional research, as we do make it all complimentary. Our format today is a panel discussion. We'll be asking about 12 to 13 questions of our panelists, and this should take us to the top of the hour. If you're inclined to do so, we would welcome attendees to post questions as we and the panelists will do our best to respond after today's session. To do so, please submit using the Zoom app with the Q&A button at the bottom of the app. And with that, I'd like to ask our panelists to please turn on your video and make sure you are off mute. And it's my pleasure to turn the call over to SEG Managing Partner, Alan Sanzori.
Thank you, Chris. So for those of you that don't know me, my name is Alan Sanzori, and I'm the Managing Partner at Software Equity Group. Like many who were operating businesses in 2008, I've been asked to compare the 2008 global financial crisis to what's happening today. Within the SaaS world, what really jumps out for me is how fast things changed here in 2020 and the pressure that this puts on SaaS operators. It's also interesting to see how the COVID-19 world is impacting SaaS businesses differently. It is industry and product category specific. Consider the performance of a SaaS business serving retail point of sale versus a SaaS business in telemedicine, or perhaps a SaaS business in life science. We're also seeing some of the best in humanity, selfless people going out of their way to help others. And I'm certain in the local communities of the attendees joining us today, examples of people helping people abound. For us at Software Equity Group, it was about 2 weeks ago when we began asking ourselves, what can we do to give back? One idea was this webinar. We survived the global financial crisis. You can survive the COVID-19 downturn. While the idea was simple, we needed the right panel. We needed a panel of successful SaaS operators that had experienced past downturns and had come out the other side stronger. Kent Hudson, Terry Slattery, and Vinay Bhagat were at the top of our wish list. We made 3 calls, and the 3 calls were answered. Answered with a reply, of course, I'd love to help. I am humbled and grateful that these SaaS pioneers volunteered their time. So to each of them, and from all of us at Software Equity Group, thank you. With that, let's meet our 3 panelists. Kent, Terry, Vinay. Gentlemen, please introduce yourselves in this order, then we'll begin today's panel discussion. Kent?
Hello, my name is Kent Hudson. In 1999, me and a small group of good team came together and founded a company we called School Dude at the time. We would later expand out of education, and you might know it better as Dude Solutions. So we launched our first product in May 2001. So we went through the first experience of a downturn was the Dotcom bomb implosion. So the one lesson we learned there was, in these times of this nature, do not be assumptive about raising capital. Pre-2001, if you had an idea, you could get a couple $1 million. By May 2001, you couldn't raise a penny. So we bootstrapped, we learned to manage cash very carefully, and we grew the company to 34 million GAAP, bootstrapping with no external capital. And then in first quarter of 14, after surviving the 2008, 2010 on our own, we had Warburg Pincus join us as a financial sponsor and take us through where the company is today, which is over $100 million of revenue. Alan explained, had a really good explanation for today's, how we think about this meeting. I'm gonna give everyone a slightly different view of it. We're going to be talking about cash is king and how to get through this. So I'm going to give you a verisimilitude version of Alan's. If you're a CEO, you are a brave explorer like Indiana Jones and I. And it's scary. You risk your life. You don't think you can do it, but you keep going on. And I was fortunate enough last June to obviously have my hat. I reached back in and grabbed it before the stone came down, and I was able to get out with the golden monkey. So I rolled and got out. Now, here's the bad news for today. If you're a CEO today and you didn't get out like I did with the gold monkey, and more importantly, save your hat, you're probably trapped inside for 2 years. And we're going to hopefully give you some ideas to help you survive those 2 years so that you can get out of the cave and leave with the gold.
I love it. Terry, I'm sorry, we'll go with, Terry, you go next.
Tough to follow, Kent. My name is Terry Slattery. I'm the current CEO of a company called CheckpointID. We're a software verification solution in the multifamily space. Prior to this role, though, I spent 25 years as the president of a company called Dotcom. It was For Rent magazine originally. Through the years, we were acquired by Trader Publishing Company for $585 million. Spent about 15 years there with them. About 3 years ago, the CoStar Group bought the online version for $385 million. I had the fortune, I guess, or the good fortune to be able to work and learn to manage through 9/11, the dot-com bust, the recession of 07, and hopefully today I can help share some best practices that helped get our company through those tough times as we're heading into obviously some real tough ones ahead. So, thanks for having me.
Thanks. Vinay?
Well, I'm no Indiana Jones, but I am Indian. And in 1999, I founded a company called Convio. We were one of the early SaaS platforms. We helped the nonprofit sector use the internet for fundraising and communications. At the onset of the company, less than $100 million was raised online globally. By the year that we exited, we were doing about almost $2 billion a year in charitable fundraising through our platform. We navigated the 9/11 dot-com crisis. We navigated the global financial crisis. We took the company public in 2010 on NASDAQ, and then were acquired in 2012 by a company called Blackboard in South Carolina. Started a company as a pretty young entrepreneur, learned through the School of Hard Knocks, lots of scar tissue from that experience to share. And in 2012, founded my current company, TrustRadius. We are a customer review platform for the B2B sector. In simple terms, we help people understand the whole truth and nothing but the truth before they buy a product. We believe that the market needs transparency, and that's what we aim to deliver. And then we work with some of the largest tech brands in the world to help them activate the voice of their customers.
Great. Well, great, guys. Why don't we go ahead and get going? So Vinay, first question is going to be for you. Lessons learned from the global financial crisis have clearly impacted decisions you are making today as the CEO of TrustRadius. What were the first 3 things you did at TrustRadius, and what seems to be working best?
It was interesting timing for us. We were actually at a management offsite when sort of all the news came down about sort of what was really happening around COVID-19. So the immediate actions we took were to do cost mitigation. So freeze hiring and look at all discretionary costs that we could cut immediately, marketing, other things that we could do without cutting people. The second thing we did was go into a scenario planning exercise, building a base case, a worst case, and frankly, a doomsday scenario to understand what the likely impact would be on gross retention, on new sales bookings, and also the arc of the curve. How long would it take to go through a recovery, looking at sort of past financial crises and trying to extrapolate from there and see, what might happen in this scenario, which we obviously know is really different to past crises. The other thing I did was get super close to our current customer base. We hold now a daily war room on customer retention, where we cycle through a CSM on our team every single day and review 2 to 3 accounts in their portfolio in depth to understand if we're doing the right things to assure customer value, customer renewal, and again, just to drive maximum stickiness and expansion in our account base. And then creating a theme for the company. The theme has really for us centered around customer ROI. It's become a religion. It was always present, but I think the severity of the situation has just brought it into extreme acuity.
Great, thank you, Vinay. Terry, similar question for you. When you reflect back on the global financial crisis, what were the first three things you did and what worked and what didn't?
Well, it's funny to reflect back on some of those times. They weren't great memories all throughout, but the few things that we did that I think were really helpful. The first was to reset your goals. As you came into the year, we had strategic plans and we had very structured goals on revenue growth and double digits and all the great things that we had planned. Well, that all really had to be reset. So the first thing we did is reset our goals. And in our company, the goal had nothing to do with financial rewards, I guess. It was more, we had 560 employees in our company as this started. Our stated goal of the company is, as this recession ends, if it ever does, we want to have 560 employees at the end of it. So that's what we worked towards, and everything we did was about making sure that people had jobs at the end of this. And we're very fortunate that we didn't have to do any layoffs during the recession based on that goal. The second piece that I can share that was really important to my company and my group was accessibility. These are really tough times that are coming, and your employees want a voice and they want to be heard. Walking the floors was a daily routine for us, making sure we spent time with the employees. And I'll tell you two things that were interesting that I learned. They sound trivial, but I can tell you when you're working on morale with your employees. The first was our CEO had an idea that we would show symbolically how tough times are. And he cut the coffee creamer on the floors. And you think, well, walking the floor, they didn't care that there was pay freezes. They didn't care that there was, furloughs and things. But when you cut their coffee creamer, it was a real big deal from a morale standpoint. But walking the floor, again, it sounds trivial. We were able to fix that very quickly, and it helped morale to know that we were listening. Everybody's dealing with these tough times. The second piece I learned from that on the accessibility was at the time, we had business attire in our company. So you had to wear suits and throughout the corporate office. What we learned very quickly in being accessible was dry cleaning was a big expense to these folks that we just didn't have to have. So we relaxed the dress code. Again, a small thing in the business, it didn't cost us anything, but morale really was improved knowing that, the corporate office was listening. So accessibility is certainly important during these tough times. The third thing I would say is we had to find a plan to work with our customers. The first thing we did was a cash flow analysis to say, how are we doing as a company and what can we do? And fortunately, we were doing very well in that respect. So we were able to give flexible terms to our customers. We waived late fees and we were working with them in every way that we could. We had a plan to get through this because what we were really looking for, aside from having 560 employees still employed, we were improving the loyalty of our customers. So when we got through this, our business thrived, but it was a planned exercise of resetting your goals, being accessible, and working with your customers.
I love it. Hey, Kent, or Indiana Jones, when the global financial crisis hit, what was the single biggest operational change you made to help your company survive? And what leading indicators were you watching when dealing with your crisis?
Well, as I mentioned earlier, we were bootstrapping through the 08 through 2010, 2011. First, I'll confess that we had an advantage in 08 in that we were primarily in the public sector. Public sector is last in, last out of these cycles. That gave us the benefit of seeing it coming. Lehman Brothers filed bankruptcy September 15, 2008. When we closed out 2008, we'd had record bookings, 31% CAGR. We just knocked it out of the park. If we just look at calendar 2008, that's just because of the lag. But what did we do is we knew cash is king. If you're bootstrapped, cash is king. Because, you're going to have to get a second mortgage on your home to make payroll. That really drives you. So cash is simple. what's your bookings, what's your retention, and how do you manage cost, and is there capital? Well, we always take that last one out. And I would recommend everyone listening today to be very thoughtful on the assumption that VCPE money is going to be readily available through this. It's an assumption that you have to verify if you're going to count on that. So if you're just going to have to run on cash flow, first thing we did on predictable revenue is we were looking at the top of the funnel. And even though we were having record 2008, we could see top of the funnel declining rapidly. The lead flow was coming off, the market was turning down. So we had very good visibility. My team had done a really good job on the CRM system, Salesforce for us, and we knew we were facing some very, very strong headwinds. So at the end of the year, in January, we always gave the state of the dude ahead of the president giving whatever state of address he gives. State of the dude came first. But we're very transparent, very candid with the organization. We celebrated a great year and said, this is going to be like a hurricane trashing coastal towns, and we're just going to have to survive it. So we, one of the first things we did, we reduced headcount in sales to map to the projected MQL, SQL in the funnel. And the reason we did that, because I agree with Terry, you got to say, I don't know how long this storm is going to last, but I got to have my best people, my great team on the backside. Sometimes the only way to assure that you have the best team on the backside is you're going to have to reduce employment in people you don't put in that best category. So we did really simple. We wanted our top salespeople to have enough leads to make their W-2 expectations and not dilute them. So we brought that head count down. We adjusted marketing, all the strong blocking and tackling on cash flow there. When you look at development, I don't want to say anything too specific about that because that varies for everybody on this call. It depends on if you're just starting to build, you're halfway through a build, or you're in maintenance. There's too many scenarios there that each have a unique answer to how you try to manage this. But again, cash is king. Do all the basics, essential travel, all that. But I would just call that, go through the company and have a stop doing list. What are all the things you can stop doing to get through this? Now, the last thing I'd say on that is do not be naive on how long this is. None of us have a crystal ball, but I'm going to go out on a limb and tell you my belief system. It's not going to be a V. We're not going to be back second half of this year into a good market. My best analogy would be that the Monday after Pearl Harbor, all of the military documents were changed. So if you enlisted on that Monday, you signed an agreement, victory plus 6 months. That's how long you were in for, victory plus 6 months. I think it's a great part of American history. I would tell everybody on the call, you still got a V plus 6. This time it's vaccination plus 6 months before this gets back to normal. So if you accept that, that says you're in about a 24-month U, and you need to be thinking that way. Don't be falsely optimistic or you're betting the farm, which you don't want to do. So that's how we were thinking. And the key thing is it's going to take a while to blow over, but you got to have your best team with you on the backside.
Great. Thank you. Vinay, so clearly Ken had some changes in his business strategy in the global financial crisis when he was operating Dude Solutions. Specific to TrustRadius, have you reevaluated your business strategy and target market? How are you balancing thinking about the short versus long term, and what key pivots are you making in the business today?
He's muted.
Absolutely. So one of the first things that we started to see was just different sort of segments of our market reacting differently. We don't sell to certain sectors that have been really hit, like travel, for example. We sell to the tech industry. And there are variances from sector to sector, but what we saw very acutely was that large enterprises were behaving very, very differently to small companies. We saw that, current Q1 pipeline and in our forecast for Q2, that we were still seeing positive movement and signals with our large enterprise targets, but companies that we sell to with less than 200 employees almost evaporated. So the first thing that we did was shift our lead generation, demand generation efforts to focus on larger companies. We had an AE focused on smaller companies. We've reassigned their territory to again focus on larger companies. The second focus is a shift towards current customers versus net new logos. We still want to pursue net new logos, but we think it's critical to kind of shore up existing customers and maximize retention through these times. We also think that expansion opportunities at current customers are going to be easier than adding net new logos. Just people are risk averse. When you've had a relationship with a company and you've proven yourself and delivered, the chance of an expansion is just so much easier. So those are the two primary changes that we've made. And along with that, it has downstream implications on things like product development, product strategy. There are really two aspects to our business. We run a consumer site used by 1 million technology buyers every month, and it's been growing amazingly quickly. We're up 237% in the last 10 months. And we had been planning to do just a lot of really creative innovation in that area on the consumer side of our business, and perhaps less so on the vendor facing side of the business, which is the economic engine, with a viewpoint that ultimately, if you own the hearts and minds of technology buyers, vendors will want to work with you. We're continuing to focus on the buy side, still think it's incredibly important, but I've put more and more emphasis on making sure we have a rock solid economic engine, that the ROI story with vendors is really, really secure, and that we've got multiple mechanisms to help the brands that we work with drive a hard ROI as well as, a conceptual kind of value from our platform. So those are the primary shifts that I've made, but it seems to be paying dividends so far. We expect to exceed our Q1 plan, and Q2 is looking pretty solid right now.
Great, thanks. So Terry, we've heard from all of us have talked about how cash is critically important. In 2008, I believe ForRent.com was somewhere in the neighborhood of 200 million in revenue. Cash was clearly key. What steps did you take to preserve cash?
Well, and some of this has been touched on. Obviously, taking essential travel, expenses, any expense related to things that you can do in other ways, I'll say. So we learned in 2007 about conference calls and the effects. We're doing Zoom today, but back then we didn't have Zoom, but we really learned how to be efficient on conference calls and continue the sales process. I didn't want people traveling. We had, as I said, almost 600 people. The amount of money we were spending on travel had to be cut, and we had to learn to do things differently. So, nothing that's so dynamic in this conversation, but things like pay freezes, everybody should be doing them. What I will tell you that I learned about this probably more than anything else is we all know the fundamental things to do to preserve cash, but you need to understand that your employees get it. And a recession is not a company issue, it's a national issue. And they're seeing it everywhere they go. And, I spoke to an employee here at my office about a week ago and said, how are you doing? She said, I'm just glad I still have a job. And it really is reflective of your employees get it. And the cuts that you're going to make and the tightening of the belt, they'll understand it. So don't be shy in doing it and be transparent as to why. But preserving cash is something that every business will be doing for the next foreseeable future. And creating different ways to do that with your employees' input is how you're going to get through this.
Great, thank you. Kent, at the time of the global financial crisis, Dude Solutions, as you've indicated, was a bootstrapped business, self-funded company. What actions did you take to keep your employees positive, engaged, and feeling safe and stable?
I'll echo Terry to start with is the employees know what's going on. Maybe they don't study it to the level we do, but they know what's going on. So you have to communicate to them. If you don't, if you leave a void, it will fill with negative information. So you have to communicate to keep the landscape positive. One thing I remember is I was very, very fortunate to have two parents that grew up through the Great Depression. So I'll take one lesson learned from the Great Depression that I was taught growing up, and that was very simple. You can either work or you can worry, but isn't it rather foolish to do both? And what that meant to me through times like this is that if you can author a good strategy and show all the employees how you're going to tactically execute so that they know that if they go do this new job as it's defined to get through this and work hard, they will worry less and they will feel in control. Because let's all look at like COVID. We feel out of control. I mean, what can we do? You get that feeling of hopeless or something. So what you really need through your communication is give them the plan to get out of it, how to execute it, so they will work and not worry. The other thing I'd say we did that was extremely successful, my team came up with what turned out to be a brilliant plan. We said, instead of focusing on our pain, let's focus on our clients' pain. Let's get our whole company focused on the pain, the fears, et cetera, that our clients are having. Because by the time we got into 2009 and into 2010, they were seeing rough budget cuts. Some of them were just unbelievably bad. We had some of the departments we were trying to sell to having to lay off 50% of the employees within that department. That is hard to sell in there when people say, well, if I buy this from you, I'll have to reduce headcount. I'd have to fire a friend here at work kind of thing. So we just really understood that pain. And what we came up with was we put together, we took the two. How do you keep our team highly motivated? How do you engage with the client? We came up with what we call the Survivor Tour. This is like a Kenny Chesney national tour. We picked 22 cities that we would do one-day seminars. Our team had tour T-shirts. It was the Great Survivor Tour. Then we went to our top decile of clients that just had the change management ability, the skills, where we could see that they were surviving through this, got their best practices. And we went to 22 cities and gave this survivor presentation. And we never even mentioned our products. We just went in and said, we want to work with you so you survive. Never once directly would we survive, that you will survive. And that picked up so much momentum, we kind of changed it to the Survive and Succeed Tour. It's not just about surviving pretty soon. Now let's talk about succeeding. And that really captured the emotion and hearts, both of our team and our clients. I think you have to think about building goodwill through this, because if you go to your clients and say, look, poor pitiful me, we're having problems, so I got to cut your service, I got to give you price increases, I got to do, in other words, I got to inflict pain on you so I won't have pain. I think, yeah, you might get through that for a year, but you're killing the future of your business. So you really need to think about, when I get through this, have I earned the respect and loyalty of my target market, my clients, yes or no? How do my team feel about it? It worked out great. And toward the end of that, we were worried about our attendance at our annual meeting we called Dude University, but we still had record attendance when we were selling to an audience that had travel restrictions. So we had a large group together, and I'll never forget this. We retained Marcus Luttrell, the famous Navy SEAL lone survivor, to say, let's talk about surviving and succeeding, and he basically, came out and said, look, I was shot 7 times in the leg. I was the sole survivor. I had to get away, and all I could do was I would take my hand, draw a line in the sand, get on my elbows, pull myself across it, do it again. I did that for 7 miles to survive. Now, you're telling me you had a 10% budget cut and you got a problem? Really? But it was all of this about, come on, we can survive, and we can succeed. So find a way to engage. Now, you got to engage intellectual. You've got to tell them the numbers. You got to tell them the plans. But you got to engage on the emotional side too. and earn the loyalty of your clients through this. Don't be short-term. A lot of companies, I think, can burn their business getting through this. Well, I mean, by burn the business, kind of burn some bridges with your clients. And I think that's penny wise, dollar short, fool's game. So be very thoughtful about that.
I couldn't agree more. Terry, launching a product is never easy, let alone in a down market. In 2008, ForRent.com was knee-deep in converting from a print media provider to an internet listing platform. What different steps would you take to launch a new product in a downturn?
Well, at the time we did For Rent, what we really had to do during that downturn is just accelerate it. We pulled off the Band-Aid and said, we've got to make this happen, and we did. But I want to go to kind of today and where we are. One of my favorite quotes is from hockey great Wayne Gretzky, and he says, don't skate where the puck is, skate where the puck's going. I'm sure you've all heard that. So I thought about that with our business at CheckpointID, and understanding that our model today is very simple. Prospects for apartment buildings would come in and tour the property, and before they did so, we validate their ID. That was our business model. Well, several weeks ago, I got our leadership team together, and I said, what's going to happen to us if this changes? And they can't go into an apartment community and tour, or we're going to be out of business. So we were really thinking about where this could go, what could happen. We had an online product that was kind of on the shelf that was untested, and it needed a lot of work. And it was really for a future launch. So what we have done with CheckpointID in the last several weeks is we've pivoted completely on our product and our R&D. All of our resources are aimed for this online product in the event that we might need it. And this was several weeks ago. So you kind of fast forward to today, and apartment communities are not doing tours in person. So fortunately, because we saw where the puck was going or could be going, we pivoted and came up with a solution for the online verification. So all said, we are having the largest sales month in the history of the company based on us looking at a product launch to meet the needs of the customer where they were going. And I think that's really what business, there are opportunities in a crisis. There's always an opportunity. If your company, if you know your vertical and you know where it possibly could go and you can get there quickly, that's really what launching a product is about right now. And you know, again, I go back to the For Rent days when we had a very, very lucrative print product that we were trying to transition. We basically gave it up. We said, we've got to do this and we've got to do it now. Not because we wanted to, because the market was dictating it. So if you're looking at product development and things that you're doing, don't be afraid to pivot, because the world is going to change. Your customers' needs are going to change, and you really need to meet them where they're going. So,
absolutely, time doesn't wait.
Right.
Vinay, if you could go back to the beginning of the global financial crisis or the dot-com bust and give yourself advice, what would it be?
Yeah, I'd really like to go back in the Wayback Machine to the dot-com bust and talk about that period. So I was frankly young and inexperienced when I founded my first company, Convio, and not unlike a lot of kind of first-time entrepreneurs at the time who had been fortunate enough to raise capital pretty easily in that 99 kind of period. Frankly, we got ahead of ourselves in terms of expanding headcount, resources ahead of revenue, and frankly, ahead of where our market was in market maturity. I think the answer in terms of how you grow your business is often different as to whether you are bringing kind of a better mousetrap solution to a well understood problem, or whether you're building a new category. In both my companies that I've built new categories of solution. And when you think about achieving product market fit, there's what your product does, but there's also market maturity. And sometimes it just takes a while for a market to warm up to a new idea or a concept. And it's very easy to kind of, believe in your own vision and get too far ahead of where the market is in their own thinking. So that actually resulted in us having to go through a very painful period where I had scaled the company to about 75 people and had to do a material RIF down to 45. One of the board members I had was a very senior executive at Dell Computer. And he said, do not repeat our mistake. When we've done RIFs, we have done them in successive waves, and it just meant that your employees who survived any given RIF always felt that there was a target on their back and they were worried, and it made them less productive. If you're going to cut deeper than you think you need to, and immediately start hiring again, because as everyone's talked about, morale of your team is absolutely critical, and you want to make them feel secure and safe and then motivated to grow again. And while, of course, saying goodbye to 30 friends and coworkers was really difficult, we tried to do it as humanely as possible. The reality was the next day we ended up becoming a more effective and efficient company and started growing and focusing and really kind of channeling all our energy into being the best version of who we could. So it was actually, a really important kind of lesson. But if I could wind back time again, I would say, don't get ahead of yourself, be ultra measured. One of my catchphrases today as a leader is, most businesses are a marathon, not a sprint. You have to pace yourself. Don't exhaust yourself in the first 5 miles and then wear yourself out.
I've definitely heard that one. Terry, this relates back to Vinay. So what are the top 3 things specifically pertaining to staffing you would recommend a CEO do that's dealing with this crisis today?
I can tell you from, again, history of going through this, what changes in traditional business rules. So traditional business rules for staffing are, most companies have a high percentage of happy and productive employees. You've got a subset, though, of a smaller group that's unhappy with their job and they're going to move on. They're going to go to a different company. That happens in any organization. And the third group is a group that are happy. They love what they do. They're just not productive. Every company has a subset of that, and that's traditional business rules. But if you move forward to what's different during a recession, and this is really critical for your management teams to understand. You've got to train to this and you've got to spot it immediately. You're still going to have a high percentage of happy, productive people, hopefully. Traditionally, they're going to be even happier than they were before because they're looking around left and right and people are being laid off and they still have jobs. So you've got a real good base of good, productive people. The challenge comes in the second group. Now you've got a small group that's still unhappy. But I'm going to tell you, they don't leave. And they don't leave because in a recession, they've got nowhere to go. And that's really a critical piece of recession management, is knowing that the people that are unhappy in your company that normally would leave are going to stay. And then the third group of people that aren't productive, that typically you would work with and spend more time with, you don't have time to do that. So the lessons that I would say for your management team during getting ready for a recession is, the second and third groups, you've got to move them out. They're not going to move out themselves. You've got to be aggressive. You've got to make the moves quicker than you normally would during a recession. But the upside of this is, when you go to backfill, the pool of talent out there is enormous because so many companies are laying off really, really good people. You heard Vinay talking about his company. I'm sure all of those people were very good and productive people. People are losing their jobs today, not for any fault of their own. So as you backfill people that are unhappy being at your company or unproductive, if you do it the right way and you can get through this crisis, which you can, you've upgraded your talent going into the future. And that's really an opportunity during a recession to find the good people that are out there. The last thing I'll tell you that I learned that was just something personal to me, when I used to hire folks before the recession, if I got a resume that said they were let go somewhere, my assumption in life was they must have done something wrong. So I wouldn't hire someone. Their resume would go to the bottom of the pile just because they had been laid off. That was something that changed during the recession, because 3 out of every 4 resumes I got were people that had been laid off somewhere. And I recognized very quickly that, again, these are talented people. So don't have a preconceived notion that just because they lost their job, they were the underperformers. Many, many good people were just on a list and lost their jobs because it was a mandated cut. So it's an opportunity if you do it right. And my again, message to the management teams, move quickly on underperformers and replace them with the talent that'll be available.
Thank you, Terry. So this is going to be our last question, and then we're going to have some time. We'll quickly close it out. So this question is for you, Ken. If you were starting or investing in a SaaS company today, what areas would you focus on?
I'll go back to piggyback off something Vinay said on his question. If I could go back to 2001, early 2002, and what would I say to myself? I can tell you, I wouldn't say a word. I would keep my mouth shut, because if I knew what I was going to have to do to survive, I would have probably quit. I remember telling my co-founder, we got to that point, no-go decision back then. I told him to go home, talk to the wife, really think through it, come back and see me Monday morning, and decide how much work it was going to take to pull this startup off in a bad environment. And once you know that, I want you to multiply times 4, and then tell me if you're willing to do it. And he came back, he multiplied times 4. Several years later, he sat me down and said, "Kent, you lied to me. The multiple was 10. And, but it is unbelievably hard to pull off. But when we launched, I had 300 hotel nights in a 12-month period, living at point of sale for survival. And you don't find people that'll do that. That's kind of an outlier. But I think you just have to be realistic about how tough it is. I'm not saying don't launch, but you got to understand, because I think some of these good times has spoiled people. It's kind of like 1999 all over again over the last few years. Is startup capital a little too easy. You can get money. You don't have that level of commitment. And so if you're starting up in this environment, you need to be really thoughtful about that. I've talked to a lot of startups. I said, wait, maybe you should consider some lower cost offshore. Oh, that won't work. Oh, really? I mean, I did it and the story had a happy ending, and I could get 4 developers in good places for 1 here. And in these times you have to think that way, and no, I don't want to, So, and I can give a lot of examples like that. So the key thing is, it is a window of opportunity. You read a lot of good stories on that. The companies that started in recessions that became good companies because they were the only ones, as Terry was saying, skating to where the puck is, launching innovation. But if you're a startup, you don't have the foundation of existing revenue streams, client bases, brand in the market. It's just 5 times harder. So you definitely, there will be some great startups coming out of this, but the effort to pull it off is multiples of what most people expect and the reality of it. And the biggest thing is, when you're a startup, you don't know how much cash it's going to take to get to break even. Investors have to know cash to break even, and you can't tell them. So that's probably your one biggest problem, is focus is right there.
Well, thank you, Kent. And thank you to all of our panelists. And of course, thank you to all of our guests. We hope you found the session to be helpful. Please stay healthy and let us know if we can be of assistance. I'd now like to turn it over to my colleague, Chris Biebel, for closing comments.
Thank you, Alan. As we're at the end of our scheduled time, I'd like to ask Alan and our panelists to please turn off your video and mute yourself. I'd like to say thank you again to panelists Terry, Kent, and Vinay. I speak for SCG and the audience when I say we are so grateful for your participation. To the audience, thank you. We hope you found the discussion helpful. We will be sending a form to submit any additional questions, and we'll do our best to answer those promptly. We'll also make the recording available as well. Thank you, everyone, and have a wonderful day.